Hello and a very warm welcome to Moneycontrol.com. Nirmala Sitharaman, the finance minister, presented a budget that is being termed as a historic one. It is being hailed for its credibility of the numbers that it presented. Well, the day after is always a good time to review the budget, and we have with us the person who has the pulse of the investor, the pulse of the market. Please welcome Mr. Nilesh Shah. Mr. Shah, let me begin by asking you. You termed the budget as a Bahubali budget yesterday. What's driving the optimism?
So in Bahubali picture, with one arrow, Amrendra Bahubali shot three targets. Something similar has been achieved by Honorable Finance Minister. In this budget, she has increased allocation for infrastructure investment. In fact, it is more than market expectation. She has supported consumption by giving tax cuts. It's little less at 35,000 crore, but at least it will improve sentiment. And most importantly, she has pursued the path of fiscal prudence by bringing down deficit this year to 5.9 and setting a target of 4.5 for FY26. So with one arrow, she has achieved infrastructure investment increase, which will be growth multiplier for economy, consumption boost, and path of fiscal prudence.
Right. So all the positives that we've ticked on the budget. A lot of people have been speaking to us saying this is probably her best budget in the last 5 years. There was a lot of expectation that this will be a populist budget, but it did not turn out to be so. Having said that, market's response yesterday was rather unenthusiastic. I'm sorry, they were not so as enthused. What do you think was weighing on their mind as they got to know more details of the budget?
So yesterday, non-budget related events kind of probably took center stage ahead of budget. There are many provisions in this budget which people will understand and they'll appreciate it at a later date. But market and economy can be different. Indian markets were trading at a premium to rest of the emerging markets. There was FPI selling because they found many cheaper markets compared to India. And yesterday, despite both domestic and global institutional investors turning net buyers, markets fell. So it was non-budgeted related events which influenced the market.
Okay, so you don't think that the fiscal situation, even though the target has been set for 4.3% for 2025-26, the target of 4.5% that has been set for 25-26, it's still higher than the 3% that was originally set. Is that bugging the minds of market investors? Is that something that's bothering them?
I don't think so. That will be the cause of concern. One, India is an asset rich balance sheet, and the deficit which is being raised is actually funded out of local money. It is like father giving loan to the son, and son's balance sheet showing that there is a debt. Ultimately, within the family, it doesn't matter. So 4.5% is not a concern. I think long back I had heard a story about Dawn movie, which was acted by Amitabh Bachchan and Zinnat Aman. I guess when they first shot the movie and showed to the people, they found it unentertaining, and then they added that "Khai Ke Pan Bana Raswala" song, and then re-released it, kind of thing, and then it became a hit. This budget is like Dawn. Maybe yesterday market didn't appreciate it because of non-budget event, but in the rest of the year they will certainly come to appreciate this budget, and it will be as hit as Dawn movie.
Okay, I love the analogy of Dawn in this, though Miss Sitaraman is far from from Dawn, like her persona is completely different, but I'm sure she'd like this comparison. How about let's look at the numbers a little bit. Do you think the revenue expenditure that has been stated in the budget is that a conservative estimate, or do you think it's a very realistic estimate, and we will not exceed that estimate that's been put out?
So my feeling is that like current year where revenue expenditure went up by about 4 trillion rupee because of various exigencies, next year also there will be some increase. But as of today, based on today's factor, have we provided for this exigencies? Answer is yes. For example, this year urea subsidy is about 1,33,000 crore out of
Mhm.
total fertilizer subsidy of 1,75,000 crore. Based on today's gas prices, that subsidy should be just 1 lakh crore. There is a over provision of 33,000 crore to take care of volatility in prices. Now, if fertilizer prices go below, these numbers will be far more. If they go higher, then this might be little less. But as of
Mhm.
today, based on today, what we have projected, I think it's very, very real.
Okay, this is factoring into account that the interest payments will rise 14%. You'll have inflation at about 4.5%.
Yes, and more importantly, the revenue estimates are fairly conservative. We are looking at about 10.5% growth in both direct and indirect tax. This year, we are at about 18%. Now, certainly, economic growth is coming down, so tax revenue will come down. But from 18 to 10.5, I think there is still scope for improvement over there. Similarly, dividend income from RBI or public sector banks or public sector undertakings, that's fairly conservative. The divestment, we can easily overachieve the target set. So, on the revenue side, we have been fairly conservative. On the
Okay.
expenditure side, we have been fairly realistic. And that's why unanimously people are saying that this budget numbers are believable, they are real.
Right. I want to ask you, considering we are looking at a very tough year globally, we are looking at a recession. In this budget, there is also a move to rehaul public transport, and states are also being asked to rehaul public transport, which I remember Mr. Chitambram had also done in 2008, 2009, which led to a very spiraling effect in the economy. We are looking at export growth petering out. It's already happening. So, do you think that the budget creates enough environment and creates an environment to stimulate domestic consumption? It stimulate conditions that will protect us from a global recession.
So, one, to create protection from global headwinds, not only the budget, but outside of budget, will have to do many things. Not only the government, but also the citizens will have to do many things. For example, we are vociferous consumer of Chinese items. As citizen, we need to adopt Swadeshi so that our Chinese imports can come down. We can't have $100 billion import from China every year. Second thing, coming to the budget, the consumption boost by 35,000 crore tax benefits, the 10 lakh crore allocation for infrastructure investment, the 2 lakh crore credit provision, credit guarantee provision for MSME, focus on futuristic developments like green hydrogen, robotics, AI, ML, drone. These are all things which will come handy in protecting Indian economy against global headwinds. But do remember that when there is a storm outside, there will be some impact on us. We can't be totally immune.
Right. Okay. Considering we saw the non-budget related events that weighed down on the minds of market investors, but you did say right now that there are things that the market is yet to absorb and yet to react to. Could you tell me a little bit more about the gift city provision that you feel that will be a big boost to the markets?
So in this budget, a provision has been made whereby P note issued from Gift City will carry no capital gains tax liability. When FPI comes directly to India, they pay 15% STCG and 10% LTCG. If they make the same investment via P note issued from Gift City, there will be no tax liability. This straightway enhances FPI's return by 15 to 10%. I'm sure a lot of FPIs would like to explore this. This reduces valuation gap of India vis-a-vis its peers and makes it more attractive. As FPIs and market discover such kind of hidden gems, I'm sure they'll start factoring that into their calculations.
Okay. Okay. I want to get a sense from you on how are investors and how's the world looking at India, considering the budget that we got yesterday and what happened with Adani, Adani withdrawing the FPO. How are these two events going to play out when it comes to the investor community around the world?
So one, I had probably less than 12 hours to interact with global investors on both the topics. But the feedback which we have received from our sales teams when we circulated our budget note to investors is by and large positive response. They have appreciated the budget, even though it's one ahead of election, it's not populist. It achieves complex targets like fiscal prudence, infrastructure allocations, consumption boost. It's credible in world where many budgets are not that dependable from data point of view. We are standing out, and more importantly, lays the foundation for ensuring that Indian growth remains ahead of its peer group. Put together, long-term investors are happy with the budget which we have presented. But please remember, it's a journey, and budget was just one event. Post budget, we'll have to execute things announced in the budget and also keep on taking necessary turns depending upon how situation evolve. With respect,
Absolutely. Yes.
with respect to the non-budget event, clearly there will be different viewpoints from different sets of investors. One, there will be existing investors who will look at this price correction in certain companies as an opportunity to invest. There will be debt investors who will be worried about equity capital not being raised, and does that impact their debt calculation. There will be investors who are wanting to invest or not invest in this group, and they'll be evaluating this events to figure out whether it makes sense to invest or not. There could be reaction even from the index agencies. So there are too many moving parts in this saga. One thing is very clear, that FPO investors have benefited tremendously by return of money. Otherwise, they would have looked at mark to market loss, albeit notional, on the day one.
Okay, but in your analysis, what do you think there will be a damage to India because of the Adani episode, and what damage would that be?
So we have always got a premium valuation vis-a-vis our peer group. And I believe this is attributable to 3G: the earnings growth superior to peers, the governance standards better than peers, and our green commitment, where we are tackling global warming and other environmental challenges far more convincingly than others. In order for us to just justify this premium valuation, I have to maintain this 3G. Now, clearly, Adani Saga is, creating repercussions for investors. My feeling is that if we manage this saga, it will actually add to our valuation premium. There are businesses wise, this group is creating fantastic infrastructure. Now, there are certain questions raised and certain answers given. As a country, if we can convince investors that our governance standards will be better than rest of peers, I think our premium valuation will continue.
Okay, so you are not concerned that this episode could actually raise governance concerns in other Indian companies, that this could have a spillover effect.
I don't think so. One, there's a now 30 odd years track record on governance where we are far better than others. And it is proven time and again. Even in this saga, businesses wise, there is no dispute. It's all about the valuation of the businesses where there are cross opinions. As long as we can convince investors that there is growth in India, there is governance standards in India, and there is green commitment to India, they will eventually come back to invest here.
Okay. Any misses from the budget, Mr. Shah? Anything that you were hoping to see in the budget that Ms. Sitaraman missed out on?
So it's not a miss, but what I would have loved to see in the budget and which is not there is related to monetization of assets. For example, there is 9,000 property in custodian of enemy property. Now, I'm sure liquidating those properties is not an easy task, but by suitable intervention of central government and incentive to local and state government, we could have made a beginning. Similarly, there are assets lying with the government which we could have monetized through REIT InvIT structure. We have made a beginning, but now it is time to pick up the speed. The third will be related to raising of certain taxes which are unique in nature. For example, an American citizen surrendering their citizenship will pay a tax on market value of their assets. This is called exit tax. In India, we know 17 lakh Indians have surrendered their citizenship from 2014 to 2021. We need to tax people who are leaving the country for assets created in India and they may take it out. So we could probably introduce this kind of uh, new resource raising by monetizing existing assets, by levying different kind of taxes so that our resource mobilization improves even more.
But elections might have played a role in that, Mr. Shah, not to include asset monetization, to set a very conservative agenda, a conservative estimate on disinvestment. So elections might have played a role in that. I want to ask you about going forward in terms of priority areas, since this is the last year before the government goes for elections next year. A tall agenda has been set when it comes to capital expenditure. The government has consistently increased allocation. However, they have not been able to completely spend that money. And now they've also asked the states to, they've put a deadline for the states to spend that allocation in building assets in terms of capital expenditure. Um, any advice or anything that you'd like to any advice that you'd like to put out there when it comes to this increasing reliance on capital expenditure to ensure that private investment also starts coming in?
So we need to clone Mr. Sridharan who built Konkan Railway in Delhi Metro in record time. He's very aged person, so I can't request him to come out of retirement and start executing India's infrastructure project. But through cloning technology, we should be able to create many, many young Sridharans. We need Mr. Sridharan kind of dedication in executing projects. Today, execution on ground is challenged by so many things. Can we create a dedicated focus like Delhi Metro came out at a war speed? Uh, can we do that in other projects? If we do that, then the benefit of infrastructure spend will multiply through economy. There's a common consensus that 1 rupee spent on infrastructure will eventually create 3 rupee of activity. But in a project where we take 5 years to complete instead of 2 years, the cost of construction goes up because of the interest during construction period. The technology gets obsolete in a 5 year period. And this reduces the benefit of infrastructure spend. If we can single mindedly focus on execution like Mr. Sridharan, if there are many more Mr. Sridharans in India, the benefit of infrastructure spend will multiply significantly higher than what we have seen today.
What's the sense you're getting in terms of private investment, Mr. Shah? The Eco Survey said that there's an uptick in private investment. Do we see that coming up more in the year, or do you think that companies will continue to hold tight onto their purse strings, considering we are looking at a global recession?
So there is undoubtedly awareness that exports growth will be slower next year than this year. However, domestic market continues to be very strong. And in areas where capacity utilization are upwards of 75-80%, like renewable energy, power, telecom, uh, you know, infrastructure, that's where we are seeing investments. There are areas where there are supply side challenges like automobile, or there are capacity constraints in terms of utilization. That's where investment is not picking up. But overall, are we seeing a distinct revival in private sector investment? Answer is yes. It is aided by improving capacity utilization, lower
Mhm.
leverage on the balance sheet, and the availability of credit because of the lower leverage. Put together, there is money, there is need, and there is execution.
Okay. Okay, my last question, and I have to ask you this. There is a lot of emphasis now to move to the new tax regime. What is your investment advice when it comes to whether moving to the new tax regime or not? Also on the equity markets, where should Indians be investing? What asset classes?
So I'll recommend investors to consult their chartered accountant rather than rely on my advice. Do what is beneficial to you. Today, both options are available, and do what you think is beneficial to you. But from an investment point of view, let the tax consideration alone be not the driver of your investment. You need to invest based on your risk profile and based on your risk investment objective. 2023, the returns from debt, equity, and gold will be almost similar. Uh, you can't be investing in just one particular asset class unless until your risk profile permits. My recommendation to investor is standard. Be a long-term investor. You can't create miracle in a short period of time. Be a regular investor. Markets are markets, they'll go up and down. Your regular investment will ensure that you are averaging into an asset class. Little drops of water make ocean. And finally, be a disciplined asset allocator. Don't chase past performance. The best time to buy is when past is in red, not in green. Put these three things together: discipline as investment, regular investment, long term investment. I'm sure your financial freedom will be secured.
Okay, my last question. So currently the Adani stock is in the red. Good time to buy?
I can't give stock specific comment. And if you're to ask someone whether a stock is worth buying or not, you better invest in mutual funds and let the fund manager decide.
Fair enough. All right. Okay. Thank you so much, Mr. Shah. We look forward to more advice from you. And as always, thank you for a very, very candid assessment of the budget. Many
Thank
thanks.
you.